Hi, everyone. Welcome back to the Investipal podcast. I'm super excited for today's guest. We have Matt Reiner on the show. Matt is the managing partner at Capital Investment Advisors and Wela Strategies, where he's helping people build investment plans that actually fit their lives, especially when it comes to retirement. He's also the host of the Future Proof Advisor and newsletter, helping advisors unlock their full potential and build long-term success. Matt, thank you so much for coming on.
Cameron, thanks for having me. Looking forward to the conversation. I appreciate it.
So before we get into what we were discussing before, I'm curious on your journey. Like, how did you get into this space? And besides the focus with Wela and Capital, um, what made you focus in with the podcast and with the newsletter on helping investment advisors out?
Yeah, I think that the easiest way to really start is just to hear kind of where it all kind of going back in time. 28 years ago is really when my journey started. It's when my dad founded our company, Capital Investment Advisors, and I was there along, watching him as a younger person at that time, but watching what he was building and developing. And then my real journey in the business started about 17 years ago when I joined the business, and at that time, Capital was already had nearly hit $1 billion, but it was during the Great Recession, and we are down now close to $400 million. But we had the infrastructure and the team already in place for $1 billion firm, and at that time, that was something to really wave your flag about. And one of those individuals that was on the team, there's about 10 individuals, was my brother, and I started in the business really dealing with a lot of imposter syndrome of figuring out what was my value, why was I there. I felt guilty at times because I was given this opportunity. And I worked really hard to try to prove myself. And much to my detriment, though, I really struggled in those first few years of figuring out where my place was. And I ultimately found my place about 9 years ago when we decided to start a technology company within our wealth management business. And I decided to go and run that. And we started out as a mint.com type company, and then we evolved to selling to wealth managers. But that's where I found my passion for innovation, technology, project management, leadership, inspiration, all of those types of things. And I really fell in love with it. And we built ultimately a company that was a workflow automation system that was eliminating the menial and mundane of traditional tasks within a wealth management firm. At that time, leveraging early types of AI and RPA and stuff of that nature. And we served over 50 RIAs with our technology, raised $7.5 million. And my big break really came when that company failed. We lost every investor dollar, and we had to close down shop and tell almost 10 people that we had no more money, and we ran out of money. And the reason that was the big break was it allowed me to now integrate back into our company, Capital Investment Advisors, and come in with a different perspective. I was then now able to marry my understanding of wealth management and serving families and building a wealth management business with my understanding of technology and experience outside of both wealth tech and also just technology in general, and bring it together to create this new area that we focus on within our business called transformation, where we are focused on what do we need to do in our business to be where the industry and where the world is going to be 5, 10, 15 years in the future, so that we can be proactive and not reactive, to enable us to serve our clients with a better experience, to enable our team to be more fulfilled, and to also drive enhanced bottom line profit for the business. And it's really been just an amazing opportunity. And, a lot of the thought leadership and the future proof advisor stuff has come from this concept of we have learned a lot in our business, going from when I started about 450 million under management to now we have over $6.5 billion under management, serve over 6,000 families within 5 across the nation, and with five offices across the country. And I have a mission, a personal mission, that I believe that every human being needs a human financial advisor. I believe that the value of human financial advice is exponential. It goes beyond the fee. It's much more valuable than the fee that is paid. And I wish and I would love for us to be able to serve everybody, all 350 million people in the United States or whatever it is at CIA, but I know that's not possible. And so the brand is all around sharing and creating community and helping to empower advisors to serve families in a more efficient and more valuable way, and to find more fulfillment in their life and helping their clients find more fulfillment. And if we can do that, then I think that everybody is better off. And so that is my mission, and I think that the blend of the background that I've had helps to provide a different perspective than maybe just being in wealth management going forward.
A lot of interesting tidbits in there. I want to circle back on the startup and the technology arm that you built out. I think there's a lot you can learn from failures. I'm curious, where do you think, reflecting back on it now, things went awry? And then a follow-up question to that, is there any parallels between building a technology firm and building an RIA?
Yeah. That's a really interesting question. The first part of the question, there's a lot. That could be a whole nother kind of podcast. I after we shut down in March of 23, I took a week off and went and wrote everything I learned, and it was about an 85-page dissertation of things that learned and experiences that I had. And I think that some of the biggest learnings that I had was early on. I didn't put failure on the table. I was running from failure as opposed to accepting that failure was a high likelihood. And when I did that, when I finally put it on the table, I saw the business in a different way, and I made decisions in a different way. I wasn't making decisions scared. I was making decisions to go succeed, not from not failing. I think that the second major thing that I learned was getting out of the way of what I'm not good at. Starting a business, you feel that you need to be the CEO and the leader and the visionary and everything of that nature. And the reality is I'm a people person, people pleasing person. And that's not good skills to have as a CEO that has to make some really tough decisions with human beings and make people make difficult decisions. And when I realized that, I was able to bring in a COO that was much better at that than me, which then allowed me to be where I wanted to be, which was selling the product, developing the product, visioning the product, and connecting the dots for the industry to see why the product was valuable. And that's actually when we started to see a lot of success. But the problem was it was too late, right? And the final thing that I would say, when you get into a venture backed, when you start raising money, it's a different game, right? But there's another lesson that I learned in the sense of when you're building a product, we were building the product based on my understanding of the business that we had built at CIA already, which was an established business, which was everything was fully functional and robust because there was 15 years of building in that business. And we built the technology to try to serve and be all encompassing as opposed to going very niche to start, right? So we were integrating into all the different technology solutions, CRM, email, custodial, financial portfolio reporting systems as well. And we tried to do everyone's as opposed to and looking back, if I were to do it again, I would have gone and just said, we're going to do one tech stack only, which is going to very much narrow our field. But because we were burning cash so much, we felt we needed to go do that to be able to get sales, which then kept our eye off the ball of getting really great at the product. We were good, but not great. And, now looking back, if I had some of these AI coding tools, we probably could have built it a lot faster and a lot quicker. Maybe we closed it down maybe just before we had the opportunity. But those are three of probably 45 to 50 lessons I've learned throughout the process.
Very fascinating. And yeah, you are right. The AI coding tools are a massive lifesaver these days.
Yeah, and they're incredible. But I didn't really answer your second question regarding the similarities, and I think that there are similarities. Running a business is running a business. Whether you're building technology and selling technology, or you're providing a service to others, it's a business. And within a business, there becomes complexities when you bring more humans into the business. And I think that is, managing people, managing expectations, being able to communicate expectations, and understanding people and ability to have difficult conversations and all these types of things. There's a lot of similarities in it. And what you think about in running a wealth management business is that we are dealing with people's life savings at all times. And that is very, emotional. And when you're building a business, a technology business, your product is your baby, and it's very emotional. And you have feelings about that. And you have to learn in both those instances how to put feelings aside and get to the business resolution, or within wealth management, get to the financial resolution that needs to be there, and have that tough conversation to help people because you can see the other side of it. And so with both businesses, there's a lot of uncertainty. In any business, there's a lot of uncertainty. And I think that there's something to be said about the best leaders in the world are really great at handling uncertainty because they just stay present. They don't worry about what happened and they don't try to predict what will happen. They just execute on what they can do right now. And I think that that's a similarity across any business that I really took away and I see now day to day within our business today.
Okay, super interesting. So with that, I'm curious, like you have a very unique perspective here on you've built up technology in the wealth tech space. You operate a wealth firm as well. What do you think the future holds? There's obviously a lot of buzz around AI. I think I've had probably a dozen conversations on this podcast just talking about it as well. And it's everything from meeting note takers are the future, all the way to an existential crisis on what's the future of advice look like. Curious to hear your thoughts on that.
Yeah, here's the thing. I think that AI is going to eliminate some aspects of our jobs in the world that we are today. And I think that there are areas of the business that makes a ton of sense where AI just is better and it's more efficient for us to do our work. The thing that I've always seen, and like EQ of AI is getting better. A lot of the voice tools like Sesame and stuff like that are getting a lot better and more realistic. And the avatars are becoming more realistic. And I think that there is this ability to create exponential leverage to serve more families. What I think that how I see this business is that AI note takers to me is like what people were saying about being innovative by bringing a portal to their business back 5-8 years ago. AI note takers are it will be the norm. They are the norm. They already are the norm. They should be the norm, right? They are just more efficient from that standpoint. I think that the wealth management business doesn't even understand how this business is going to change because it's so different than what they can imagine it being. And what I mean by that is I think that there is this role that AI can probably reinvent the robo-advisor from 15 years ago to create a more AI type of generated personalized advice that is super personal, super interactive, communicates both via text, via phone, via video, whatever it may be, but it's all generated by these humans that are there. I think that every firm will have their own LLM that understands that will be personalized. This agentic framework is super interesting and is definitely the future. I think that firms are going to be managing agents across their firm that are focused on investments only or operations only or purpose only. I believe that what this will mean is just like the evolution went from, if you look at history of this business, it used to be wealth management was only for the rich and famous. You had to have Uber's amounts of money. Then Schwab and Vanguard and Fidelity commoditized investment management and opened the door to many more people. Robos helped with that. And as that happened and you commoditized investment management, advisors had to do something new. And what they did was they got to financial planning, holistic financial planning. That was the new thing. The thing now is I created a cash flow planner, a Monte Carlo analysis, a risk analysis, everything of that nature within about 8 minutes using Claude the other day. And now that is commoditized. And it was better than any of the things that were out there. And it was personalized the way that I think and that I want to present to my families. So financial planning is now commoditized. So now we have to figure out what is our next value add. And I believe that AI is going to eliminate all of that aspect. And it's going to really highlight the personal aspect and the relational aspect of the business. And what's going to mean is that we are going to have more time and more ability to serve more people and go deeper with more people. And I believe that the next iteration that's going to be caused by AI, taking a lot of things off our plate and removing a lot of job functionalities that we have to allow us to help people find their purpose and live their purpose fully by leveraging the monies that they have invested with us. And that is what's going to happen. I think that avatars are going to be normal. I think that chatting with AI and calling in and having general questions answered by AI will be common. And I think that the idea of using AI to help you do rebalancing and to understand what to do investments and tie and marry things like what y'all are doing together will be the norm as well. And everybody said it, so I'm not saying anything new here, but AI is the new email. It is the new internet. And you can push back and be the doomers on it and say about regulation and all this. The reality is that your clients are going to expect it because they're going to be interacting with it. And it's becoming so good that you're not even going to know you're interacting with it and you'll be able to hyper-personalize with it. And I believe that AI is going to make wealth management super innovative because now me and you can go create products quickly with these coding tools that are separate to us, and we can build and iterate on it. And I think that that is super exciting, which is also a little bit of a threat to some of the wealth tech companies that are out there, because I think you can create it for cheaper, and there'll be tools to maintain it for cheaper as well soon.
100%. I mean, we get around with having a very small dev team because like 90% of our code's generated through LLMs now. That allows the price to be a lot cheaper as well. And you can outcompete legacy providers. I'm curious, do you think with that there's a revenue model shift with advisors as well, where, to your point, let's say the investment management was where my moat was before, that's becoming more commoditized and moving more to this planning world. I think Michael Kitcey's put it out where there's some advisors now charging not a percentage of AUM fee, but a percentage of income fee, which I thought was really unique. Do you think that will be introduced more readily in the advisor world?
Yeah, the fee conversation has been going on forever. I just started listening to another podcast recently of Kitsy's from back in 2018, and it was interesting. It was with Joe Duran, who was running Unite Capital at that point. Unite Capital tried to do like a SaaS type model where you just pay a flat rate. And the families actually didn't like that. They actually, when they offered them that they could roll that into just an AUM model, they wanted to roll into the AUM model. And there's a reason psychologically that I think it's going to be hard for families to get over into a payment or a non-AUM model, is because this is a relationship business. When you start having to pay out of pocket like a recurring amount from a credit card or like a check or whatever you want to do, or Bitcoin or whatever, Venmo, whatever it is, it becomes transactional. And when it comes transactional, the relational side is diminished. And people want to have a relationship when it comes to dealing with their money in retirement. They want to feel safe, secure, and felt for. And this methodology, this payment structure works because it creates a more relational, less transactional feel. And what I think will happen is that you'll have tiered AUM models. And what people will start to do is they'll break out, this is how your AUM model is, but you don't have to worry about writing a check or sending money or whatever. It just comes out, like 30% will be investment management, 45% of the fee, 30 basis points will be investment management, 40 basis points will be financial planning, 30 basis points will be your tax planning. And you can go a la carte, and you will then be able to pick your AUM fee. But it will be an AUM fee because costs do go up. The amount of people needed to support even with AI, you still need people because it's a human business. And I think people just feel comfortable with that from a psychological side. And there's a lot of people, Kitsy's, I think, being one of them, that disagrees with me there. But I think that many families have become immune to that. And if you start breaking down saying that the 1% isn't just for investment management, you get X, Y, and Z, because now we can provide all this for 1% or for 1.25% or for 1.5%, which is less than what you're paying. Then families go, well, wow, that makes sense. And I'm getting increased value every year, which is going to put a lot of pressure on firms to do more than what they're doing. You can't do what you were doing and charge the same fee. I'll say that. You've got to do more.
Yeah. Okay, I want to come back to the tech conversation now. You mentioned it before we started recording, and you brought it up around this avatar thing. We talked a lot about AI. Tell me about where you think virtual reality can be applied in wealth management. I think that's super interesting.
Yeah, so I am a huge believer in virtual reality, and I might just be persistent on this until it becomes a reality, and then I can say I've been talking about it forever. But I think that virtual reality has a huge opportunity within wealth management in really two domains. And I'll get to those two domains, but I think that the challenge around virtual reality is it hasn't had its AI moment yet. What I mean by an AI moment is these three things coming together at the same time that create the perfect storm. One is accessibility, right? Accessibility is important because accessibility, AI has been around since the 50s. It just hasn't been accessible. I mean, we all watched IBM Watson win in Jeopardy, but it wasn't accessible. IBM Watson wasn't accessible at that point. Applicability is number two. IBM Watson winning in Jeopardy, like that was cool to watch, but like, what does that mean to me professionally? And what does that mean to me in my life? Nothing. ChatGPT, I can use it for professional stuff. I can use it for personal stuff. I can use it to plan a date or write a cover letter, right? That's applicability. Accessibility is now I can get it from my phone, computer, wherever. And then the third one is cost. IBM Watson was like $3 billion, like $1 billion to build. Now I can get ChatGPT and AI for free. So that convergence creates a new frontier, a new moment. All right. Virtual reality hasn't had their moment yet. It's not accessible, easily accessible. It's not applicable to everything, and the cost is still high. But I think that over the next few years, especially as AIs continue to come out and the cost of chips and everything continues to come down, that's going to continue to be changed. I know that company like Sesame, for instance, I'll just talk to them for one more moment. They came out with this voice thing and they had it on an open, it's now open source and everything. They're not trying to be a voice company. They actually want to make glasses. That's what they want to do. But in order for them to make glasses, they needed to create a realistic voice. And so they created that realistic voice, but that's not their monetary strategy. They want everybody to be able to have a pair of glasses that they can look through and interact with AI. And then the glasses see everything that they're doing and gives them feedback and talks to them and is able to then have this like AI moment. So you're using those glasses. That is super interesting. VR in wealth management is twofold. One of the hardest things in wealth management is training. You can't train young people fast enough, right? Because it's not a matter of years in the business. It's a matter of economic cycles that you've experienced. And you can't replicate economic cycles other than time. And it's hard to, and sometimes it could be 5 years or 7 years or 8 years. And that's really hard to replicate. And it's really hard to replicate meetings, especially with wealth management firms that may only be getting like 5, 10, 15 prospect appointments a quarter or a month. Like, you got to sit through a lot of those. So that takes many years of experience. Where VR comes in is that now I have the ability, and there's already tools out there. There's a tool called Florio VR, which is doing this for neurodiverse individuals, helping to train them in scenarios that we can bring this to wealth management and put VR goggles on our new team members, and they can sit through 4 or 5 meetings. And basically, as they go through the meetings, we can put different scenarios for them to play through. You can even respond to emails or whatever it may be, go through a day. And we as a leader or a manager can say if they did it right or they did it wrong or whatever it may be, or AI can assess it. And then afterwards, you can sit through with your manager and go through an analysis on an iPad and say, this is what you did wrong. Let's replay what you did, why you did it. Here's how you need to do it. Tomorrow, we're going to do it again, and we're going to do it again. And now I can go through and I can have all these different economic cycles, and I can go through 1,000 meetings in a year. And now I'm trained, and I can sit across the table from real people and see their reactions to what I'm saying and their fears and their worries and how I deal with it and evolve them and then present them with something. I can go speak in front of a large group within VR goggles as well and practice my skills there. Training becomes easier, and it also becomes cool. It becomes cool. It's like a flight simulator. And that's another challenge that we face in wealth management is attracting young talent because it's not cool. And this makes it cool. The second element that I think that VR can help is the toughest thing as a financial advisor and wealth manager to do is to help families understand the impact of decisions made today in the future. Help them see their future self. You know, Hal Hershfield wrote the book, Your Future Self. People have a difficulty of seeing their future self. VR allows you to see your future self. Make a decision today. Let's see what it means in the future. You want to see what it's like to retire? I'll let you see what it's like to retire. And now you can make decisions today better knowing what your future self looks like. You want to see what your self looks like in 15 years, 20 years? I can make you see what you look like. And now I'm able to have better decisions to create better actions today by my families by using VR goggles. And I think and it's not even going to be goggles. It's probably going to be glasses. It's going to be very simple. Everybody's going to be wearing them, and it's going to be very easy to use and interact with. And I think that happens. I think that the start of it's already happening, right? You think about what Sesame is doing, and the speed of innovation is happening faster than anybody can ever imagine. It's quicker than Moore's law with the chip processing speeds. I think it's going to happen in the next 5 years. And I think that there will be firms using VR. I mean, hell, I would use our firm right now today with VR, but and I'll build the VR program on AI coding tools, right? Like I can do it all today. And so I think in 5 years, we'll see that.
That's very interesting. And I'll ask, do you have Apple Vision Pros or like an
I do.
Oculus?
I have a Meta and an Apple Vision Pro. Yeah.
Oh, and do you still use them? I know like it was like hype. There was a hype cycle, and now I think they've been pulling them from the shelves.
I have not been using them. I haven't been using them as much. And I think that gets back to applicability, right? Applicability and accessibility. It's like you have to go outside your norm. You know, this is kind of like the middle ground in my mind of, you know, the iPhone was so well adopted because it was easy and it was something you need to use every day. I think then about like that innovation that didn't work was like the Segway, for instance. I remember when it was announced, it was like this big announcement. It didn't work because you'd have to change so much. Like you'd have to change the sidewalks. You'd have to like change the rules and the things within roads. Like too much had to happen to get it to use. And I think that VR goggles right now where they stand is like in that middle ground. That's why you haven't had the moment to use it yet. And not enough people. And if I use it and you don't, the experience isn't as great. So it's become it's a chicken or the egg thing. So we need to make it simpler. And I think that VR may even come to, and I know they're working on it, with augmented reality, where you don't even have to use goggles or glasses. And that will get to a point as well.
Yeah, it's interesting because I thought, I mean, this is more on a metaverse side of things, which you could use VR with, and I'm left holding a bag still from COVID. But I thought COVID was that moment on like we're forced to now interact virtually. The metaverse was kind of that segue into that world, and I think a lot of us have been proven wrong behind it. I'm wondering, and like from your sense, um, I actually think it's a very interesting use case. The seeing the future self, like putting the goggles on, and here's you at a beach sipping a margarita or something like that. I'm not sure if that's how you're picturing it. That's what came to my mind when you said it, but allowing someone to actually like feel like the house that they could purchase or feel the area that they could retire is like a very interesting use case. Um, sorry.
Real quick, yeah. Just on that, I just wanted to be known for it to be utilized and leveraged in wealth management doesn't mean we need broad verse participation across everybody, right? There are tools and industries that are used to help perform the service and the value and the experience that are just used within that industry. And I think that that's the point, right? It's not matter. We don't need to get to a point where VR goggles are used across the world, like like AI is today. We just need to get to a point where there are opportunities to use it within wealth management, and I see that there are opportunities. But we just need to get the cost down and some of the tools a little bit more efficient, and they will happen. But it doesn't need to be broad selling across the world.
Okay. So with that, Matt, do you have any advice for advisors listening to this who might be a bit resistant to adopting new technologies or resistant to changing their workflows up to accommodate some of this new tech?
Yeah, I think that change is difficult. Like I'm not going to sit here and say that it's easy. And the amount of consumption of information that I have isn't that I do every day is like can be overwhelming. And the speed of change and new information and evolving information is really rapid, and that can be difficult. So I'm not saying that it's easy. My mentality that I always preach with regards to the future proof advisor is you can't go straight to the change. You can't go straight to the innovation and think that you're going to be finding a way to get better. It starts with looking at yourself in the mirror. It starts with your mindset. And you have to evolve your mindset and have a curious mindset, have an innovator's mindset, a risk taker's mindset that doesn't look at failure as the end, but as a new data point, that doesn't look at risk as a fear, but an opportunity, right? You have to look at your future self. It's hard. You have to understand your psychological biases around yourself. That takes a lot of time. I've been working on it for 15 years and I'm still working on it. I'm not perfect at it whatsoever. But once you get that, then you can move to the next level, which is create leverage. And you have to start figuring out how to create leverage for yourself with processes and standardization and acceptance. And because you have the mindset knowing that standardization and processes they're not sterile and doesn't mean that it creates like a lesser of an experience for your family, but rather it creates leverage for you to be better for your families. Then once you get that, then now you have time and space and a mindset to go and start researching, exploring, and innovating and start having that change. And so for people that are struggling with change, I would say stop trying to change. Look at yourself first. Don't change the process or what you're doing. Explore you and your mindset and why you are the way you are and what your tendencies are, and go deep in that way and then move forward. I think that everybody tries to go to the end and they fail, and they lose trust in the process, they lose faith, and it really starts with your mindset. And I think that I would just start small, and I would just start exploring you, and then you can start exploring what's out there. And don't do anything, just consume it and learn about it.
Okay, super good advice. And final question, once a founder, always a founder. Do you have plans to start another wealth tech company in the future?
That's funny. That's the second time I've been asked that in 2 days. I'm never going to say never, but I will say that what we're doing within our transformation division in our business is scratching that itch for me every single day, because we are basically incubating new ideas and new potential business models that will better our business. And maybe one day one of them becomes so successful that we can launch it out as its own company itself. But I'll say this, if that happens, I likely won't be running it. There's a lot of people that are a lot better at it and smarter than me at it that will run it. I like to incubate and ideate on that stuff. So never say never, but I'm scratching that itch every day right now in my role.
Okay, amazing. Finally, super interesting conversation. I know you have a lot to be said as well. Where's the best place if someone's interested in following along to what you're up to be able to connect?
Yeah, head on over to mattreiner.com and subscribe to the Future Proof Advisor podcast on Spotify, Apple Podcasts, wherever you are. Follow me on LinkedIn. I share a lot on LinkedIn, and when you go to my website, you can sign up for my newsletter that I send out every week, and I now include an AI piece that looks at a tool and how it's relevant to wealth management every single week. So that's the best way to see me and stay in touch with me.
Okay, amazing, sir. We'll leave her there. I appreciate you coming on today. Very interesting conversation.
Appreciate you, Cameron. Thanks so much, man.